Hello, everyone. Welcome back to the Options Professor podcast. This is Damien, and today is Friday, May 7th. Now, I'm recording this a little bit early. The market obviously has not closed yet, but I'm actually out of all my trades for this week. And, it was kind of a rocky week. I managed to go really 3 for 3. One of my trades was a little complicated because I had to adjust the position a little bit, and I'll explain that in this video. But let's go through my trades, the charts of the 3 trades that I did this week. I'm not going to go through the watch list. I'm just not going to have time today because I've got to get out of here and hit some other meetings later this afternoon. So the very first trade I did was PINS, P-I-N-S. And if you remember this ticker, it was from my watch list. I had called out really this 70 level, maybe trying to get credit at 70. And as you can see here, it stayed below the entire week. Now, I wasn't able to get the appropriate amount of credit at 70, so I ended up selling the 67. That's why this red line is here. So 67 was the level that I was targeting to get some credit on. Actually, looking back at my notes, I sold the 66 and bought the 67 to create that spread. All right, and this gave me a 22-cent credit for a dollar-wide spread. And what that means is I collected 22 cents and my total risk would be 78 cents for that spread. Okay. And 10 contracts, if you're doing this on 10 contracts, that is just times 10 times 100. So this would equal $220 in credit for a risk of 780. All right. So that's how I set these up. So a 220 credit for a 780 risk on 10 contracts. And obviously you can scale this according to risk profile. So in this trade, I managed to collect 22 cents up front, but then I closed it at 5 cents. So I went from 22 cents to 5 cents, which gave me a 17-cent profit. And again, if we're using the 10 contract as our calculation, this is $170 in profit. And it cost me $50 to close it. And if you take a look at what happened with the stock, as soon as I sold it at the 66 level, it kind of, Monday, it kind of sold off of that. And then by Tuesday, it was down to 60. And then yesterday it even dropped to a low of 57. So it was never, the 66 level was never in danger. We had a little bit of help from the pullback in tech stocks. All right, so that was the first trade I did this week, and that was right from my watch list. Got into that Monday and never looked back on that one. GS. Now this one was supposed to be on my watch list. For some reason I missed it on the actual recording and my printout of my watch list, but it was supposed to be on my watch list because I've been watching this to follow this 50 moving average, and obviously 200 is right below that. So what I did Monday was I ended up selling the 347, 345. So 347, 345 spread. And that's a 250 wide spread. I collected 73 cents for this. 55 cents. I collected 55 cents for this spread. Okay, so if we break that down, I collected 55 cents. My risk was really just 250 minus 55 cents. So it's 195 is my total risk. And again, if we do this on 10 contracts, we multiply it by 10. This is 550 in credit and a risk of 1950. So the most you can lose on this trade is 1950 on 10 contracts. The most you can make is 550. And well, let's see how this played out. Monday, it looked pretty good. It stayed above 350. I thought it was going to maybe run up to 360. But then Tuesday happened. And Tuesday had this pullback that saw it dip below the 50. I wasn't really panicking on that pullback. I know what my max loss is. That's at 1950 on 10 contracts. It's not going to make or break me. Yeah, it would hurt, but it's not going to make or break me. And I know the risk coming in. But then the very next day, we can see it recover. And then I managed to close this out yesterday for 5 cents. So close this out for 5 cents, which gave me a total profit of $500 on 10 contracts. Okay. That was 26% profit, 26% return on my total risk, which was 1950, 26% in 4 days. Okay. And the third one, this one's a little bit more complicated because this was actually a losing trade that I turned into a winning trade by adjusting it or adding another trade to make it profitable. And this is Netflix. So Netflix had earnings. I thought it would hold this 500 level. That's why the green line is in here. Now, I made the mistake of thinking that it would probably make a run back up to the 50 moving average, which is 525. I thought it was going to make that move Monday morning, and I wanted to capitalize on that. So I actually sold the 510 level Monday. And as you can see here, Tuesday happened, and then Wednesday got even worse, and Thursday not even any better. And then it started to make this hook at the end of the day, Thursday coming into today, Friday. All right, so I sold, I'll put it up here, 510, 507.50 for about 75 cents. I can't remember exactly, it was 75, 74, 73 cents, around 75 cents on this. Collected this much credit on it. Now, this is going to probably look like a loser because Wednesday, Thursday, I was in the hole big time. This thing dropped all the way down to 491 yesterday, 491. So coming back to the 510 level was probably not going to happen. If I wanted to try to recoup some of the loss and turn this into a winning trade, I had to do something that would give me a shot at doing that. So do I want to throw money at it to potentially turn this into a winning trade? And yesterday I made the decision to do that, and I'll explain that in a second. But let's take a look at this credit spread, 75 cents. My total risk here is 250 minus 175. So my total risk is 175. Okay. So on 10 contracts, this is a 750 credit. And my total risk is 1750. And now it looks like I'm going to lose the 1750. Okay, even if we take a look at where we are right now, we're still under this 510 mark. It's trading at 502. Earlier today, it hit 508, 508.50. All right, so 510 is a very difficult thing for it to come back to and then break above today in such a short period, unless we get some major news. So I'm looking at a 1750 loss. How do I potentially have a shot at recouping that with some higher probability? And what I did here was I saw this turn up. It started to turn up and it looked good into the close. And so my hope was that the market was going to carry and be a little bit stronger today, which it did. And so everything worked out. So the play yesterday was to do another spread. Okay, but I was going to do a debit spread, not a credit spread. I'm going to do a debit spread. And what I ended up doing was I bought the 495 calls and then I sold the 500 calls. And this set up a debit spread scenario. This cost me $1.90, roughly $1.90 to do this spread. The max profit I can make on this is a $5 wide. So I could turn that 190 into $5. Assuming that Netflix today would jump back over 500 and stay there long enough where I could get close to this $5 credit. Typically, I would close this out at 450 or 475. You're not going to get the full $5 unless it really runs. So I was planning on getting a 450 or 475 out of this. So this is this is what I did. I put the debit spread on. I set it up in a way to cover my 1750. So if you do the number of contracts correctly to cover the 1750, you can break even on the two spreads. Okay. So essentially what happened here this morning was Netflix jumped out, and I'll switch this over to a 5-minute chart so you can see what happened this morning. So here we are. This is the close Thursday, and you can see what I was looking at Thursday. I was actually watching it jump over the VWAP right around here, and this was 495. It was at 495, and I'm watching also it ride this 50 moving average and the TTM going into a squeeze scenario. So this is where I made that decision towards the close, get into the debit spread. I can potentially cancel out the bad trade that I was in, and just set up the contract so that I would be break even. So this morning when it made this move, it opened up, gapped up, opened up, and around 505, I put in an order to close this spread, the 495 500 spread, debit spread that I bought for $1.90. I end up closing this for 475. And so this jump, which actually was about 145% in profit just off of this spread, covered the cost of the credit spread. So now I had a free credit spread at the 510 507.50. Remember, this is a put credit spread. I needed it to get back over the 510. And so this 145% covered my put credit spread that I was in a loss. So now I have a free credit spread. Anything I can get value out of this spread is pure profit. Okay, it's pure profit for the overall trade in Netflix. The two spreads put together. Okay, if you're looking at them independently, this one's a loss. This one's a loss. I just need to manage the loss at this point. This one's a huge winner. It covers that loss. Okay, so I put them together because I would not have done this trade. I mean, maybe I would have, but I would not have done this trade really unless I was trying to readjust for the position I was in on this credit spread. So later in the morning, this thing hit 508.50. 508.50, it hit a high of 508.50, and I decided to cut this for $1.50. Okay, so remember my max loss would be at $2.50 for this spread. I managed to save $1. And so if I don't count this as my profit and I put them together, my total profit here is $1 per contract because I saved that $2.50. From the $2.50, I only had to buy this back for $1.50. All right, so it looked like it was good timing to get out of it. It then now dropped and it's hovering around 503. We'll see what happens through the end of this day, but you know what? I don't need to watch it anymore. I'm good. So out of the 3 trades I made this week, PINS, I made 22%. GS, Goldman Sachs, I made 26%. And then I don't even know how to calculate this on Netflix, but I did make a profit on Netflix, turned a losing trade into a winning one by adding that debit spread to adjust for the credit spread. All right, so if you want to learn more about these strategies, definitely join us inside of our Discord at the Phoenix Room. Leave me a message down here in the comments, or you can hit me up on Fiverr. Thanks for joining. I'll be back Sunday night with a brand new watch list.